Good morning.
Good morning.
Good morning.
Good morning.
I am going, there's only two of you in here right now, but I'm going to go get a fresca. If you can, start spreading the word since you can talk among one another if I'm not back yet. We're going to be working on a problem today where you're practicing your interest capitalization. Go into course content information. I uploaded a problem yesterday for working capitalized interest. Go into course content information and pull that question up. And the first thing that I want you to do is to calculate what is the weighted average accumulated expenditures for the first year. Now, I'll be right back. I'm just going to go and I can't stand the taste of coffee, so I'm going to go brush my teeth, get a fresca, and I'll be right back. So if y'all can start spreading the word to those that are just joining in, I'd appreciate it. Okay, thank you. Okay, I'm back. So does everybody have the, let's see, I got a question here. Oh, thank you, David. All right, so has everybody got the problem in course content information? David, thank you for posting that announcement out. In course content information is a capitalized interest problem. The first thing that I want you to be doing is calculating the weighted average accumulated expenditures for the first year. And y'all are going to be working this problem because we've already worked one together in class. So let's find out where your OS moments are. And good morning, everybody.
Good morning.
I know y'all are trying to work, but I yesterday was working with Edris and realized for the first time that when the connect problems were done and were in study mode, y'all were supposed to be, and I thought all semester long that y'all were seeing the explanations of the problems. And when Edris and I were working together yesterday on the Zoom office hours, I realized that wasn't the case. I immediately emailed McGraw-Hill to find out what's going on. We found the solution. Edris, I thank you very much for spending the time with McGraw-Hill and sharing the screen with them. And then I posted last night how you can see your explanations. So now you can go back into, the Chapter 9 Connect 2 assignment, for example, and see the explanation of what the solution is. So I'm sorry that I'm just first hearing about that. I'm going to continue my conversation with McGraw-Hill to find out why you have to do that loop around to get it, but at least we've got a resolution now. So sorry I didn't know this the whole semester. So Edris, those explanations helped you quite a bit?
Yeah, for sure.
Good. I just apologize. I assumed that they were there because I was telling it to be there. Okay, so I'm gonna be quiet now while y'all work on your problem.
Okay, sorry, I joined a few minutes late. What problem are we doing?
Oh, sorry, Josh, we are going course content information. And you will see, I think it's at the very top under the folders, a capitalized interest in class problem. So it's one that I wrote and uploaded.
Oh, okay, got it. Thank you.
You're welcome, Josh. Just ask questions. I'm going to be efficient using the time instead of watching y'all work a problem. I'm going to be checking emails. So you're just getting to the point of you've calculated the WAAE for the first year. And then we'll stop there and talk about the number, and then we'll continue the problem.
Would the denominator for the weight be 12 or would it be 18?
Oh, it would be 12.
Okay.
It's
That's what I had.
whatever it is for each year.
Okay, yeah.
And I don't think the total is 18. Recount the months in 20.
It's 17. I'm bad with counting.
Right, that's okay. 17, yeah. All right, let me find my. I'm gonna go get the syllabus. I'll be right back. Okay, so how are we doing on the calculation of the WAAE for 2020?
Good.
Good. Give me a raise your hand if you have finished it. Oh, I mean, thank you, Matt. Not a problem. All right. I got thumbs up, clapping hands. Just clapping hands is the same thing as a thumbs up. Good. All right. So we got more to go. Dom, how are you doing? Good. Nelson, you still working on it? Because I want to give y'all time to do it. I don't want to,
Yeah, I'm still working on it.
Okay, good. I just want to give y'all time because we have time. Today is all about chapter 10, easy pace. We're going to work this problem, and then I've got some polling questions that are kind of review that we'll talk about, and then we'll worry about chapter 11 next week. Stephen, how are you doing?
I'm doing all right. How about you?
I'm doing good. I'm still very worried about, my son and daughter-in-law, grandbaby, but trying to compartmentalize. They're in LA, and I cannot imagine. He's my stepson.
Yeah.
But when Bill and I got married, we got married in February. We got full custody of him in June. So I raised, I was very, I raised him. And so he's just like my son, and I just can't. He's 44, having first baby, and mom is in isolation in a room in a hospital with medical issues. And he's in another room in the hospital with just, in isolation with just he and the baby. Now, can you imagine if, and the mama has only held the baby for 5 minutes, sad, sad. And then my son, who has no idea what to do with the baby.
Yeah.
You know, the baby tested negative for COVID.
That's good.
Yes.
Very.
Yes. Sadie, Miss Sadie. For those of you that have finished it, if you want to go ahead and start calculating what the capitalized interest would be for the first year, you know, go ahead and, you know, and do that while we're waiting. Nelson, you're going to be my barometer. How are you doing? And it don't feel pressure.
Dude, I'll be honest. I have no, like, I did the first part.
So you calculated the weighted average
Yeah.
accumulated
I
expenditure?
guess I'm not doing that bad. Yeah. I
So you
did
got
the,
that part. Okay, so that's where I want you to get to, and then we'll stop. How are you doing, Brett? Have you calculated the weighted average accumulated expenditures for the first year? Brett?
Yeah, I'm here. I was trying to find where the mute button was. I think I got it, but
Okay.
not
All right, so we'll go ahead and discuss it because I want you, we're gonna break this down into each piece, okay? So now I'm going to share my screen with you. And 1,775,000 is the correct answer. Now, let me point out a couple of things. One is, notice that I wrote down, when I first did this problem, I wrote down how many months in the first year is my capitalization period, how many months in the second year. Why are these numbers important? Where are they used in my calculations? They're used twice. Where?
As your denominator,
Good. As the denominator for calculating what?
your weight.
Good. Your weighted average, accumulated, your WAAE. Good. What else are they used for? You said the denominator, right?
It's the
Yeah.
numerator for when you're finding the capitalized interest. For the
Great, Melissa. For the numerator, when you're, for the time portion of your capitalized interest. Okay. So that helps me to not have those OS moments. Then I listed my specific debt because we do have specific debt in this problem. And of course, we have to take that into consideration for our calculations of capitalized interest. So these are the dates that I made my payments to the contractor. And these numbers are the number of months. These are the number of months, which is going to be my numerator, the number of months that the expenditure was outstanding during the capitalization period. So if it was on January 1st and my capitalization period for 2020 was January 1st through December 31st, then my numerator is 12, my denominator is 12. The 300,000, I wrote the check for, I paid on April 1st. So it was outstanding for 9 months during the capitalization period. And again, count on your fingers. It was April 1st, so it'd be April, May, June, July, August, September, October, November, December, 9. And then the July 1st payment was outstanding for 6 months during the capitalization period. So the 225,000 is 300,000 times 9/12. The denominator is 12 for each of these. So is everybody with me now on where the 1,775,000 came from?
So
Go
You
ahead,
go.
Nelson.
he can go. He started first.
I don't, who was it?
It was me, Brett.
Brett, sorry about that. I didn't.
How do you get the 9 and 6?
I paid the 300,000 on April 1st. And my capitalization period during 2020, because it continues into 2021, and construction began on January 1st, my capitalization period for 2020 is the entire year since construction began on January 1st. Well, if I paid it on April 1st, the 300,000 was outstanding during 9 of the 12 months. If I paid it on April 1st, then it was outstanding April, May, June, July, August, September, October, November, December, 9 of the 12 months.
Okay.
So now can you tell me where the 6 came from?
Then it came from since the date is July 1st, then it has 6 months remaining.
Right, the July, August, September, October, November, December. Perfect.
Okay, thank you.
You're quite welcome. All right, so if anybody asks questions now, this is our learning time, not our assessment time. And remember, there's no judgment. You know, if we sometimes we get some of our greater learning experiences when we make an error and then understand, you know, why. So
my question was
sure,
about
Nelson, sorry.
the rest of, I guess, the calculation. Why'd you only calculate 2020? Are you gonna do 2021 a little further down?
Yeah, Nelson, we're going to work the entire problem, but I'm going to break it down at each stop. Okay. So the first step we have to do is calculate your weighted average accumulated expenditure. Okay. Now, stop number 2. I want you to calculate what is capitalized interest for 2020. So your next step is calculate. You can see I have it down here, but I'm not going to show you. Calculate, well, I will later, but calculate capitalized interest for 2020. Now, do we have specific debt in this problem?
Yes.
Yes. So if you have to use the decision tree, use your decision tree. The decision tree, when you practice enough of these, will become intuitive. So calculate it, pardon me?
So where do you want us to round our percentages that we get?
Oh, no rounding.
No rounding. Okay.
I have a question.
Round to 3 decimal places, Melissa.
So my calculator, when I find the interest rate, if I don't multiply it by 100, it like only rounds to 2 decimal places. Do you know how I can change that?
Yes. I actually have my calculator. I think a business student ought to have their calculator. I choose 6, but don't choose any less than 4.
Okay.
So let's see. Hit the second button. So hit second. Let's go ahead and put it to 6. So hit second, then hit 6, and then hit enter. And I think that does it.
Okay. Gonna try it.
Well, when you look at it, does it look like this? It ought to have 6 decimal places.
No, it only has 2. Maybe I did it wrong.
Okay, so do
Second,
second.
6.
Oh, second, I'm sorry. I told you wrong. Hit second,
Uh-huh.
now hit format, which is the period.
Okay.
Then 6, then enter.
Perfect.
Did that
Okay.
do
Got it.
that?
Yep.
Did it?
Yeah. Thank
Okay.
you.
You're welcome. All right, so what is capitalized interest for 2020? David, do you have it?
I think it's 100. It's 10% of the WAAE, because the 18 or 1.8 million specific loan covers it. So the capitalized interest would be 177,500.
You got it. Now, don't forget the times time, but the times time is 12 over 12 for this particular year, okay? So it is 177,500. Let's go ahead and talk about it, see how the calculation is. And I want to go through the thought process so when we get to 2021, you'll be able to do capitalize, this process for 2021. So we calculated that our weighted average accumulated expenditure is 1,775,000. Now, because we have specific debt, you need to ask yourself the question, is my WAAE greater than my specific debt? This is
No.
easy. No, because 1,775 is lower than 1.8 million. So if your weighted average accumulated expenditures is less than your specific debt, then your capitalized interest is the weighted average accumulated expenditures times the interest rate of the specific debt. Because the only time, well, let's finish this problem. So 10%, don't forget to multiply by time. Your denominator is always going to be 12 because there are 12 months in a year. What is the numerator? I know I have it here for you that it is 12, but why is it 12? Why is my numerator 12?
It's through January the next year.
Why is it 12?
I said because it's like through the whole year.
Okay, what is through the whole year?
The ones the amount borrowed was used through the whole year.
Okay, that's what I thought you were going to say. That is true that I borrowed it on January 1st, but the numerator is the number of months of your capitalization period. Remember up here that the first thing I did was I put how many months was my capitalization period in each of the 2 years that the construction was going on. So we had 12 months in 2020. Construction began on January 1st, reading the problem. Since it continued into the second year, it was still going on at December 31st. So the year 2020 had 12, the entire year was the capitalization period. The capitalization period for 2021 is 5 months, the January 1st through the June 1st, when the plant was completed.
Oh, I have a question.
So let me finish this and then I'll get to your question. So when you're calculating time, your numerator is going to be your capitalization period. My capitalization period for 2020 was 12. So that is how I ended up with a numerator of 12 and a denominator of 12. Okay, Etris, your question?
But when do you use the your outstanding debt?
Oh, okay.
Because that's what I did. So I got it wrong. But
Okay.
I mean, I understand what you did.
Okay, that's where we're going to. So let's continue on. I'm
Okay.
going to answer that question right now by continuing on with what our other decision is. This is all about the decision tree.
Should I not erase my work?
What do you mean?
Or should I erase all the?
Well,
I was
just erase your calculation of your time
Okay.
and get the correct one. So it's 170. So you calculated the weighted average interest rate of the other outstanding debt?
Yes.
Okay, you're going to
Okay,
need that for 2021.
Okay.
So no, don't erase that part. So you're going to need that for 2021. Okay. In 2020, my weighted average accumulated expenditures was less than my specific debt. So the calculation of my capitalized interest was using the interest rate of the specific debt. Since the weighted average accumulated expenditure was lower than my specific debt, then it's weighted average accumulated expenditure times the interest rate of the specific debt. Now, what if, and you're going to see this in 2021, what if your weighted average accumulated expenditure is greater than your specific debt? What you're going to see in 2021, it is. So what are we going to do? I'll tell you what, let's handle this by, so 177,500 is the capitalized interest for 2020. Because our weighted average accumulated expenditure was less than my specific debt, I multiplied the weighted average accumulated expenditure by the interest rate of the specific debt times time. Now what I want you to do, and then Edris will get into answering your question when we use, now we're going to have to use the weighted average interest rate of the other debt. But what I want you to do first is calculate what is the weighted average accumulated expenditures for 2021, and then stop. So this is part 3, Nelson, of our step-by-step problem.
Got it.
You got it? You see the method to my madness over here?
Yeah, it makes sense.
Oh, good. I'm glad I make sense because I don't always. As is true with everybody, right?
Yeah.
So calculate the weighted average accumulated expenditures for 2021. Now, you know, whether you're doing this in Excel or by hand is, you know, I would be doing it the way that you plan on doing it on the exam. So you're getting practice at it.
I do have a question in terms of capitalization period.
Yeah.
Because in year 2, it's essentially 5 months. Is that the denominator, or are we still doing it based off of 12?
Nope, that's the denominator for 2021. That was the importance of why I note this first.
Yeah.
Because I know the 5 is going to be the denominator for calculating weighted average accumulated expenditures, and the numerator when I'm calculating the times time.
Okay.
I was going to sit outside and do class, but so we could see the beautiful Florida sky and be fresh air, at least for me, but my husband's out there working. He's retiring in 3 weeks. He's done.
At least he got some experience on what it's gonna be like to just hang out at the house, right?
Yeah, yeah. He may be looking forward to the days I go on campus and teach.
So our weighted average is supposed to be more than our specific debt.
The weighted average interest rate just is what it is. It doesn't have any relationship to the interest rate on the specific debt. Was that the question?
Well, I'm saying the WAAE is going to be higher than specific debt.
Oh, yes. So yes, your WAAE is higher than specific debt.
Do we have a new specific debt, or is it the same thing?
No, it's still 1.8 million. Did you remember to bring forward the amounts that were capitalized in 2020?
No, I did not.
Okay. Remember, you have to bring forward the 2,450,000 that was capitalized in 2020 and the interest that was capitalized in 2020. You need to bring forward into your calculation for WAAE in 2021.
But that would,
Sorry, go ahead.
I was going to say, would that be multiplied just by 1, or the weight would be 1 of that?
Right. Well, your fraction will be 5/5.
Yeah, that's what I meant. Yeah.
Yeah. I just want to make sure you're using the correct numerator and denominator. I knew that was 1, but I want to make sure that you're not using like 12/12 or it's 5/5.
For the Connect homework, when I was doing the expenditures for like year 22,
Yes.
I kept getting the expenditures for 21 wrong, and I didn't know if we were supposed to put the capitalized interest there because it didn't have an option for that. So I didn't know if we were supposed to include it.
Yeah, you should include it. So in Connect, was it wanting you to add the two numbers together? Like add the,
I thought that's what it wanted, so I did that and I checked my work. But I got those wrong. So then I
okay,
took it
send,
away.
send me an email so that I can look at yours, and I can send you an email about what you did incorrect. Or now you can look at your explanations yourself.
Oh, true. Okay.
I just
Thank
sent
you.
out, yeah, you're welcome. Not that I'm trying to be lazy and not do it, but
Yeah, but
those instructions that I sent out, you can go look at the explanation yourself. And then if you have any questions, email me.
okay.
And again, I don't mind helping, not trying to be lazy. So I'm giving you, a few minutes to calculate the WAE. Those of you that think you have it, go on and work on capitalize what is capitalized interest for 2021. Those are the next two steps. So you're working on one of them.
So for year 2020, for expenditures, when you carry them over, would it be 24, like, or 2.4 million? Or would
Yes.
it be 1.77?
No. The 2,450,000, because that was the amount that was capitalized.
And then when you go to, so then you'd add 2.4 to your WAAE for 2021.
Correct.
Okay.
So wait, I got a question about for 2021. So do you just do the February and April date in terms of the expenditures?
Yep, that's all we had.
Okay. So it's not always going to be the same amount. It's not always going to be like 3.
Oh, yeah, whatever the
Okay.
contractor, you remember in chapter 6, when we were the contractor sending the bills.
Mm-hmm.
So these are just the bills that the contractor is sending, and they're paying on, whatever dates.
Right, like the
So
other
it
end.
just happened that in, all right, so let's go ahead and take a look, because if you haven't finished it, at least you've started the process and understand the process, or will understand it when we go through it. So your weighted average accumulated expenditures for 2021 is 3,747,500. How'd y'all do?
I got 3,357.
3, okay,
Probably
close.
missed the months on one of them.
Anybody get the correct answer?
Yeah.
Oh, good.
Yeah.
Yeah, good.
What the months are.
All right, so let's take a look at, you have to remember to bring over what was capitalized in 2020. So the contractor payments, when they paid these 3 payments, they debited, we're building a plant. Is this the one where it's a plant? Yeah. So they debited plant and credited cash, for each of these 3 payments. And then we capitalized the 177,500. So we brought those 2 numbers forward, and they would have been outstanding during the whole 5 months of capitalization period. And then on February,
Question about that.
sure.
So when I brought that over from 2020, I just combined them into one line.
Oh, not a problem.
Should I separate them? Okay, so the
No.
time capitalization would always be the same for both of those.
Right. The only reason that I separated them out was to show where the numbers come from. Like if I combined them, then I would have more students asking the question of where that number came from. So
Yeah.
the only reason that I separated them out was just for learning purposes or teaching purposes. All right, so does anybody have any questions? Do you understand where the 4 and the 2 came from?
So it starts
And,
in February, right?
pardon me?
For February, it's 4 because it starts in January. I think that's where I got it wrong.
Okay, so we wrote a check for $1,150,000 on February 1st. when does the capitalization period end in 2021?
Isn't it June?
Yes, June 1st. So how many months between February 1st and June 1st?
Okay, I counted wrong. Sorry.
That's all right. That's why I say the months. I'm telling you, the months. It's not the accounting. It's sometimes the months that just. So it was February, March, April, and May. Since it was June 1st, is where the 4 months came from.
Okay.
Now, when I multiplied the expenditure, what did I multiply the expenditure by in order to get the WAAE numbers? So these were the numerator, right? These were the numerators.
Yeah, and then
What was the denominator for each of them?
isn't it 5?
Yes, 5.
Yeah, I just
5.
missed. Thank you.
You're welcome. So now does everybody have the 3,747,500? If you don't, now it's the time to ask questions like others are. This is the learning community today. Well, always, but
I didn't have it, but I understand. I messed up also on the time.
Okay, so you had trouble counting months also?
Yeah, math is hard.
That's not math, that's counting months.
It's the same thing.
That's math.
Well, that is math. You're correct. But Nelson, I guess counting to 12, I thought was a college.
I essentially where I messed up at was that I counted June like entirely instead of cutting it off at
June
May.
1st.
Exactly.
Okay.
So that's where I messed up
reading problems.
All right, English is hard.
True.
All right, so we've got the 3,747,500 as our weighted average accumulated expenditure. Now I want you to calculate capitalized interest for 2021. And as Edris has already told us, we're going to have to calculate the weighted average interest rate of the other outstanding debt because our weighted average accumulated expenditures exceeds our specific debt.
Wait, hold on. Yeah, now I'm kind of like in Nelson's camp on this. Wait, so for the number of months, so wait, why is it 5 for 2020? Because I thought it would be.
When did the construction end?
Oh, okay, but we don't include June. Oh yeah, I messed that up.
Because it's June 1st.
Yeah.
Right. That's why it's 5. Okay, not 6.
Do you need it in Spanish also?
Yeah, I find when I do stuff like this, I sometimes mess up the little easy.
The easy things, right?
Thanks.
You're quite welcome. All right, so let's calculate capitalized interest. And remember, your weighted average accumulated expenditure exceeds your specific debt. So you're going to have to use that weighted average interest rate on the other debt. So calculate your weighted average, and then let's talk about that rate before you continue on to make sure we've all got that rate. So we'll have an intermediary step, Nelson.
That's fair enough.
That's fair enough.
Yeah.
Do you speak Spanish at home?
Yeah.
I don't. Edris does also.
Yeah, it's something else, really.
Well, it's just enough. That's your family home. That's your Just pretend I'm walking around class, answering questions and looking at your work.
Are you excited for your LSU quarterback to go number 1 overall?
Yes, but I don't watch the team he's going to.
I don't blame you.
So I may have to. I would like to see how he's going to do at the pro level. So yeah, because they're doing a virtual draft tonight, right?
I think that's crazy. It's awesome that's still going. That's crazy.
Yeah, it is. I usually watch the draft. That may surprise y'all, but and what about Tom Brady and
Yeah, that's exciting.
and
That's
Brock? Yeah,
I'm so happy he
y'all-
left the Patriots. Thank God. I hate the Patriots. Oh,
I did too, but now they're in Tampa. But and see, I
exactly.
live in Tampa, but am I a Buccaneers fan?
No,
No. Why?
because you're a NOLA fan, Saints.
Because I'm a NOLA fan and they're in the same division. So I can't, I mean, if they weren't in the same division, I guess I could kind of be a fan, but I can't be a fan.
I
Because
just think
they're in the same division as the Saints. But you
those
know,
are gonna be
another
some
thing,
games.
you know, since the Bucks are in the same division as the Saints, Tom Brady and Drew Brees are going to play each other at least twice.
That's awesome.
And that is awesome. I can't wait for those games. All right, back to accounting. All right, I just had a chat, but if I don't catch it right away, let's see if it'll pop back up. If I can make my chat. Come on, chat, where'd you go? When I'm in share screen, I can't get to the chat easily. So we're going to be oh, there it is. Thanks. Okay. Has anybody gotten a number?
I got 121, 169.
Okay. It's close, but not right. But that's okay. We're going to go over it. Trying is the best thing. Do what? This is safe place. I'm sorry.
121,545.
You got how much?
121,545.
No.
I got 331, 305.
Nope.
138,044.
Oh, bingo. Who said that?
That was Dominic.
Dominic. Dominic, you haven't been talking so much. So Dom Rose with the right answer. And you're a finance major?
Yes, ma'am.
You're going to be an accounting major after this?
I graduate in May, so it's a bit too late.
Oh, that's right. We've had this conversation.
I'm looking at a few accounting jobs, though.
Oh, are you?
Yep.
Good, because I knew that we had talked about, and then all COVID happened.
Yeah, it's been crazy searching for jobs.
I'm sorry that's, happening to you. All right, I saw another chat come up, but.
Taking over the.
All right, we're going to go ahead and take a look at it. Dom was right, 138,044,07. So let's see how this happened. We all agreed that 3,747,500 is our weighted average accumulated expenditure. 1.8 million is my specific debt. So since the weighted average accumulated expenditure is greater than my specific debt, I'm going to take the specific debt times its interest rate. And for 1 year, we're going to get into the times time later, which is 180,000. Now, where did this 1,947,500 come from?
Your weighted average minus the specific debt.
Okay, good, Dom. It's the weighted average accumulated expenditure minus the specific debt. I've already calculated the interest on 1.8 million of the 3.7 million, so it's the excess. So the 1,947,500 is the amount that the weighted average accumulated expenditures exceeds the 1.8 million. So that is the amount that the weighted average accumulated expenditure exceeds, that's the excess over the 1.8 million. Now, second question, where did the 7.769% come from? First of all, what is it? Title that percent for me. What do we call that percent?
Weighted average.
Good, that is the weighted average interest rate on the other outstanding debt.
Sorry, can you explain where the 1.9 million came from again?
Okay.
Yeah.
The weighted average accumulated expenditure is 3,747,500.
Okay.
So you got that in your calculator?
Yes.
1.8 million is your specific debt. Subtract that.
Oh, okay.
Okay, so it's the amount that the weighted average accumulated expenditure exceeds the specific debt.
Yeah.
Okay, so now let's look at how we calculated the weighted average interest rate of the other debt. The other debt was we had 3 notes and the principal balances were these 3, 1 million, 3.5, and 2 million. And the interest rates were 7%, 9%, and 6%. So then I just calculated principal times rate and then times 1 for the year. We're going to get into the times time shortly. And so the total interest on the 3 notes, now is my specific debt included in this? Is the specific debt included in the weighted average interest rate of the other outstanding debt?
No.
No. Okay. So the total interest expense, the total yearly interest expense on those 3 notes is $505,000. Is everybody cool on that one? Does everybody understand where the 505 came from?
Yes.
Okay, that's total interest expense with a total principal of 6.5 million. So I simply divide, in order to get the weighted average interest rate, I take my interest expense divided by the total principal, and that's how we got the 7.769%. So now I'm going to multiply the excess times the 7.769%, and the yearly interest is 151,305.77. And then I add it to the 180,000. So I've now calculated the annual interest on my weighted average accumulated expenditures. The 1.8 million and the 1.9 equals the total of my weighted average accumulated expenditure. But because my weighted average accumulated expenditure exceeds the specific debt, I've got two interest rates. The interest rate of the specific debt, and then the weighted average interest rate of the other debt. So I totaled to 331,305.77 as the total yearly interest on the weighted average accumulated expenditure. Now, where did this 0.42 come from? When I multiply by time, what is my numerator?
5.
5, because that's your capitalization period. What is the denominator always?
12.
12, because there are 12 months in a year. So when you do 5 divided by 12, you get 0.4167. So when I multiply by time, I did the annual interest times time, and then got the interest, the capitalized interest for 2021.
Wait, so I'm sorry, for what do you multiply, you just multiply your 331 by your 5/12?
Correct.
Okay.
All right. I'm going to be uploading this in PDF, but I want you understanding now. Does everybody understand where the 138,04407 came from, the capitalized interest for 2021?
Yep.
Okay. And
Is there?
go ahead.
I was wondering if there's any way we could do the journal entries for the years that we would be doing.
Got some down here. So patience. All right.
For this, so I know I got the 183 or 138, like the
You got
capitalized
the
interest.
capitalized interest.
Yeah, I got that. Did you just duplicate it at like underneath? Like right, pretty much right where your cursor is.
Right here.
No, next to the 7.769.
Oh, I did, because I used it as a reference in, I don't know why I put it there. I did.
Okay,
Here, I can.
it's fine. Okay.
No, actually, let me do this. Reference the correct number. There we go.
Okay.
Just made extra work for myself and you caught me.
Yeah.
All right, so let's take a look. Someone said, let's do some journal entries. What was the total amount of interest that this company either paid or accrued on the 4 notes that they have outstanding? They have the 3 that are unrelated to the building of the plant, and then they had the 1.8 million specific debt. So what is the total amount of interest for the year? Because these 4 notes were outstanding. We're doing the journal entry for 2021. These notes were outstanding for the whole year. So what was total interest that would have been either paid or accrued for the 685,000? Remember, we calculated the 505 as the total interest on the 3 other notes. And then the specific debt, what was the interest rate of the specific debt?
10.
10. Okay, so the 1.8 million times the 10% is 180,000. So the total interest, notice I'm not calling it expense or anything, but the total interest on all the notes is 685,000. Now this is for 2021.
This would be at the end of the year.
Well, just trying to show you the journal entries. Yes, let's say that they have to pay interest at the end of the year, or they have to accrue interest at the end of the year.
Okay, yeah.
Okay, so we know they're either going to credit cash or credit interest payable, depending on whether they're paying it now or later, for 685,000. Now, again, this is just for 2021. And they would debit the plant for the 138,044, the amount that was capitalized, because it increased the cost of the plant. And then the difference would be interest expense.
Does the weighted average accumulated expenditure get debited to the asset?
Oh, no. The weighted average accumulated expenditure is only used to calculate capitalized interest.
Okay.
Okay. I think what you're losing sight of is, let me, I'm in view. I want to, okay. So in year one, we, looking at the problem, and of course here, in year one, we paid the contractor $2,450,000 in year one. And every time we made a payment that summed up to $2,450,000, we debited the plant and credited cash. So on April 1st of 2020, I debited plant for $300,000 and credited cash. So David, you see that the weighted average accumulated expenditure is not the number that's capitalized. What's capitalized is the payment itself. Okay, does that help you with discerning? Okay, so we have debited the plant in 2020. We had debited the plant for the amount that was paid to the contractors of $2,450,000, and then we credited cash.
Yeah.
Then at December 31st, when we calculated capitalized interest, we would have debited the plant for capitalized interest. We would have debited interest expense and then credited cash or interest payable for the $685,000. Do you want me to do the journal entry for 2020 for the interest?
Sure.
All right. So let me insert some rows here. Sorry, I had a chat. So let me insert some rows, and so this would be the journal entry for interest for 2020. During 2020, did we have all 4 notes outstanding for the whole year? The other 3 notes we had been having, so they would have been outstanding during 2020. When did we borrow the 1.8 million?
2020,
Right, but what date in 2020?
January 1st.
So January 1st. So it would have been outstanding the whole year also. So what would have been the total interest on all the notes for 2020 and 2021?
It'd be the same amount.
The same amount, 685,000. So I would credit cash or interest payable for the 685,000. What did we determine was the capitalized interest for the plant in 2020?
Yeah, 177,000.
177,500. And then interest expense would be the difference between the two. So my journal entry for my interest in 2020 would have been debit interest expense for 507,500, capitalize 177,500 of it, and then credit cash or interest payable for 685,000. And then we've already gone over the 2021. Okay. So I'm going to scroll down, and the question is, what would be the capitalized cost of the plant on the balance sheet at December 31st of 2021? Oh, this was now referencing that one that Nelson made me change because I was working too hard. So in 2020, for all the contractor payments, every time we paid it, we would have debited the plant and credited cash. Then we capitalized 177,500. Here's the journal entry where we debited the plant for the portion of the interest that was being capitalized. Then in 2021, we made these 2 payments in 2021, which, as you can see on the problem, sum up to $1,650,000, because every time we paid the contractor, we debited the plant and we credited cash. And then this was the amount of capitalized interest for 2021. We see the journal entry here where we debited the asset. So the total capitalized cost for the plant would have been $4,415,544.07. Now, really, that would be in the billions. You know, a plant cost a whole lot more than 4 million, but I'm just making numbers up and names up. Okay.
Could you real quickly show where you got the 1.65 million again? I missed that.
Where I got the 1650.
Yeah.
Look on the problem. It's this. Look on the problem and look at your contractor payments for 2021.
Okay. Yeah, I see that now.
Okay. Ask questions about these numbers. All right, what I'm going to do now is, obviously y'all need some work on this. There's some problems at the end of the chapter for calculating capitalized interest. I will upload some more problems for you. Remember how I did for exam 2? I'm going to do for exam 3. I will upload problems. They're end of chapter problems. I will upload practice problems for you. Okay. Now what I want to, and I'm also going to be uploading the topical coverage. I'm going to be sending out some polling questions now. And the polling questions are this, they're on chapter 10, and it's kind of start of a review of chapter 10.
Can I ask a question on the
Absolutely,
monthly-
Melissa. Do
Okay.
I?
When you went over the journal entries for 2020,
Yes, ma'am.
we credited cash or interest payable. Why do you include the 2021? Like, why is it 685,000?
Well, it's 685,000 each year. It was 685,000 for 2020.
Okay.
It was 685,000 for 2021.
Oh, okay.
It just happens to be that I had the same notes outstanding both years for the same number of months.
Okay, thank you.
You're welcome. Okay, so let's do one on goodwill. All right, I'm gonna give you about 30 more seconds. Okay, I'm gonna go ahead and end the poll. And the majority of you have the correct answer. Let's go through, and this is not only addressing this specific question, but also just a general review. What type of an asset is, what type of long-term asset is goodwill?
Type of
Type,
asset?
yeah.
Intangible.
Intangible, good. Okay, and intangible. Because what are the three types that we have? What are the three types of long-term assets?
Intangible, property, plant, and equipment. I forget the other one.
Natural
Resources.
Natural resources, okay? So property, plant, and equipment, which is tangible, intangible, and natural resources are the three types of long-term assets that we have. Goodwill is which one of those?
Intangible.
Intangible. Now, intangibles, how do companies get intangible assets on their balance sheet?
Just it.
They can't be manufactured internally, so like it'd be like buying trademarks.
Okay, good, good. Only purchased intangibles are capitalized. As Edra said, internally generated intangibles are not amortized, are not capitalized. So only purchased intangibles are capitalized. Internally generated intangibles are not capitalized. Now, intangible assets are divided into two groups. They're bifurcated into two groups. What are they? What are the two types of intangibles that we have? Good, a definite life and an indefinite life. Why do we bifurcate intangibles into definite life and indefinite life?
Or amortization.
Great, good, yay. Because those that have a definite life are amortized. Intangibles that have an indefinite life are not amortized. Great. Now, goodwill is it a definite life or indefinite life?
Indefinite.
Indefinite life. So is it going to be amortized for large companies? No. So A is incorrect. Now, only purchased intangibles are capitalized, so only recorded by the purchaser of a business. So B is wrong because it says the seller. Remember, the seller is the one that is generating the goodwill internally. So they're not going to have goodwill because they're generating the goodwill internally, and internally generated intangibles are not capitalized. So we see the correct answer C, in that we know that purchased goodwill is the excess of the fair value of the business, the purchase price, over the fair value of the net assets. Okay, so now let's send out one where we calculate goodwill. So what amount should Bostic record goodwill?
Give us like a quick warning before time's up.
Oh, I'm sorry. Yeah, I only
Okay.
have 4 out of 20 that have voted. So,
Okay, cool. Just 'cause
yeah.
I'm sorry.
So how about another 30 seconds?
Yeah, that's great.
All right, so I'm going to close it in about 10 seconds. 5, 4, okay. All right, so we just talked about that goodwill is a purchased intangible. It can only be capitalized if it's purchased. And here we do see that Bostic is purchasing Monroe's building company. Now, what was the purchase price?
95,000.
95,000. Now, they acquired the net assets of the company. How do we define net assets?
Assets minus liabilities.
Good, assets minus liabilities. Now, the question here is goodwill calculated as the difference between the purchase price and the book value of the net assets, or the fair value of the net assets. And the prior question that we just had gave us that information. What is it?
Fair value.
Good, over the fair value of the net assets. So what is the fair value of the net assets?
90.
Well, 90,000 is the fair value of my asset.
55,000.
Right, it's 75,000 because you have to subtract the 15. So the fair value of the net assets, assets minus liabilities, is 75,000. So Bostic acquired net assets of 75,000, 90,000 in assets, assumed 15,000 in liabilities. but she paid, assuming Bostic is me, she paid 95,000. So how much more did she pay than the fair value of the net assets?
Oh, 20,000.
20,000.
Oh, so it's not 5,000.
Oh, so I got it right.
It's 20,000.
Oh, okay.
Oh, it just showed the majority.
95 plus 90.
Oh, right. It just shows you what the majority answered. So the majority was wrong.
Okay.
Okay. So I assume that the 5,000 came from the difference between the 95,000 and the fair value of the assets. Remember, when you purchase a company, you're not only getting the assets, but you're also assuming the liabilities. So it is you've got to compare the purchase price to the fair value of the net assets. Okay?
So you found the difference of so you did 90 minus 15,000. Take
90
out the
minus
liability.
15 gave me the 75,000, which is the fair value of the net assets.
And then you subtract the 95 from the 75. Okay.
Right.
I didn't take out the liability. Okay. Yeah.
So you want to assume the liabilities and just say, okay, I'll just pay your liabilities and for nothing.
I don't know. I thought it was comparing assets. I thought I saw that in the book somewhere. I don't know.
Yeah, no.
You have to take out the liability, you know.
Yes, yes. All right, so let's look at another one. And this one is about understanding an ARO. It's not calculating it. I will be uploading problems about calculating it, but understanding the ARO. All right, so let's end in about 10 seconds since it isn't calculation. Okay, 5, 4, 3, and okay. So the majority is correct, but the majority isn't the majority. So let's take a look at each one of these. The asset retirement obligation, first of all, what kind of an account is it?
Liability.
Good, it's a liability. Now, where does the liability come from? When we're purchasing what type of long-term asset? So what long-term asset are we purchasing that causes us to have this liability?
Something involving natural resources?
Good, natural resources. So we're buying natural resources, okay? Now, what are the 4 types of costs that are capitalized when we purchase a natural resource?
Acquisition, exploration,
Development.
discovery,
Development, good, and
restoration.
And restoration. So the 4 types of costs that are capitalized are the acquisition cost, the development cost, the exploration cost, and the restoration cost. So we know they are liabilities associated with the restoration of a long-term asset. Okay, so that's true. Restoration cost, are they capitalized?
Yes.
Yes, we just talked about the 4 costs that are capitalized. So if it's capitalized, does it increase the balance of the asset?
Yes.
Yes. All right. Now, if I were taking this, if this were an exam question, and I know that A is right, and I know that C is right, B, I don't know. But that doesn't matter. A is right and C is right. I know that. So I'm just going to answer D and hope like hell that B is right. That's the way I would approach this question. Because there were no A and D, A and D, that could be a choice. Now, are measured at fair value of the balance sheet, in the balance sheet. How do we calculate restoration cost? What is the first thing we do? We got engineers and they gave us, probabilities of different costs. What do we do?
Multiply all the probabilities by the potential cash outflows.
Good. So we multiply the potential cash outflow by the probabilities, and we end up with a number. Then what do we do with that number?
Find the present value.
We find the present value. Okay. Now, because the amounts that we expect to pay in the future are the amounts that we expect to pay in the future, and then we've calculated the present value of it, then that is the fair value of that liability on the balance sheet date. Okay, so that's how B turns out to be correct. So all of the answers are correct. Now, during the time period, say that this was a coal mine, and it's going to take us 4 years to extract the coal from the coal mine. What would we do with the ARO over those 4 years? What would we do each year for the 4 years?
Like for every single year?
Yep,
we,
for each year.
We recognize the ARO?
We would what?
Every year we recognize the ARO, throughout the 4 years?
We recognize the ARL?
To answer your question, the asset retirement obligation, throughout the 4 years,
yeah,
we're going to recognize it each year. Is that what you're asking in terms of how we pay it?
Yeah, but I guess how do you recognize it? What do you mean by recognize it?
Well, do you mean throughout the 4 years? It's gradual. Every year we recognize it as a liability.
Right, but what do we call? I guess I'm missing. What do you mean by recognizing it? What is the word that we do? We calculate what each year? What kind of expense?
Restoration expense?
Do you remember accretion?
Oh, okay, yeah.
Yeah, remember we calculated
okay.
Accretion? Yeah.
Mm-hmm.
So we calculated the accretion expense, right? So remember it was the carrying value of the ARO times the interest rate that you use to calculate the present value. So don't forget your accretion expense. Again, there's only that one problem that we worked on Tuesday at the end of the chapter. So I will write, remember I lost all the data on my computer like a dummy. Although the IT department has to take some blame on that too, but not anymore. I got full ownership of it. But so I'm having to reprocess all of the work that I had done for 20 years with problems. So I will be writing problems for practice on this. So here we reviewed the ARO with this one question. So let's go to another question. And this question is about a non-interest bearing note. Now, I wasn't able to fit because I have very limited space. So what amount, the question is, what amount will be capitalized for the equipment? So what amount will be capitalized for the equipment? So see if you remember how to handle non-interest bearing notes. Okay, so I'll give you about 20 seconds more for doing your calculation. All right, and I'm going to count down. 5, 4, 3, 2, get them in. Okay, I'm going to go ahead and end the poll. All right, and the majority is correct. The majority is correct, but it's still not the majority. All right, remember, the present value of everything you gave up is going to be capitalized. So what is the present value of my note? How many years was it?
1.
1. So 1 is in. What is the interest rate? Come on, let's go. What is the interest rate? 5?
5%.
5 is the I. Are we going to be making any payments on the note during the 1 year?
No.
No. So 0 is payment. And then 640,000 is the future value. And I compute the present value. And what do we get as the present value?
609,523.
Good. 609,523. But what else did we pay? We gave them a note, and what else did we pay?
160 in cash.
160 in cash. So you need to remember to add the 160,000. You need to remember to add the 160,000.
Can you go over again what we type into the calculator?
Matt, you're kidding me, right?
No, I'm not. On the exam, are we going to be able to use those charts?
No, you have to use a are you going to carry around a chart in your pocket protector when you're working?
Well, no, on Connect, there's like the little like blue like.
I know, but use your calculator.
Yeah, so I got it wrong. So what are you typing for each one again?
How many years is it?
How many years? It's going to be 1 year.
So put in 1 as your in.
Yeah.
What is the interest rate?
5.
Put 5 as your I.
Yeah.
How many payments are you making during the year?
No payments, right?
0 is your payment.
Mm-hmm.
What are you paying at the end of the first year?
The 640. That's
the 640,000 is your future value.
Yeah. So I thought that's what I did.
Compute.
Okay, so it's the 609,524 there.
Right, 609,523. They rounded in. So then add the 160,000. Add the 160,000. What I'm going to do is, what would be the journal entry? Again, this is just some chapter 10 practice that we have a breather on today. what would be the journal entry that we would do? And I'm going to pull up Excel. No, that's not where I had it. I had it here. Yeah. So I'm going to share my screen with you. So we can look at what would be the journal entry. So the journal entry, this is the problem. And we know that we were going to credit cash for 160,000. That's how much we're paying. We know that we're going to credit note payable for the face value of the note. We calculated that the amount that's going to be capitalized is 769,523. This was the 609,523 plus the 160,000. Okay, the present value of the note plus the cash. Then we debited discount on notes payable for the difference between the face value of the note and the present value of the note. So this is the journal entry that would have been done to record the purchase of the equipment on July 1st of 2021. I paid cash, and then I have a note payable. Okay. Now, what kind of an account is discount on note payable?
Contra liability.
Good, a contra liability. And what is going to happen to this $30,477 over the life of the note? Now, this one only has 1 year, but what happens to the discount on notes payable over the life of the note?
It'll start decreasing.
It does decrease because it becomes what?
Isn't it interest payable?
Or interest expense.
Yeah, it'll become capitalized.
No, it becomes expense. This doesn't have anything to do with capitalized interest because are we building this equipment ourselves?
No.
No, we bought it. Now, the reason that we have interest expense is because although it says it's a non-interest bearing note, we know that 30,477,000 is the implied interest in the note. This discount on notes payable is going to become interest expense over the life of the note. Do you remember carrying value times rate times time?
Yeah.
Okay, we worked a problem on this on Tuesday. How do you define carrying value? Okay, I want everybody to take a picture of this problem because you're not going to see it again. So take a picture of the problem. You know what the answer is. And then down here, I've done the journal entry. So go ahead and use your, I started to say camera, but it's a phone now that has a camera, and take a picture. And then I'm going to stop sharing screen. So I assume everybody's done that now. Now, to calculate the interest expense every year is carrying value times rate times time. We worked a problem on this on Tuesday, so go back and revisit that. How do we define carrying value?
Isn't it the original cost minus accumulated depreciation? I might be wrong though.
Not the original cost.
The present value plus interest expense.
Okay, so the carrying value of the note
Isn't it notes payable minus the discounts on notes payable? Oh,
Yes. So the carrying value of the note, maybe you thought I was asking about the carrying value of the equipment, but the carrying value of the note, because to calculate interest is the carrying value times rate times time. So the carrying value is note payable minus the discount on notes payable, a liability account, minus the contra liability account. And the carrying value is what's reported on the balance sheet and what is used to calculate interest expense. So go back and revisit. We see an area now where you've got some work to do. Okay, where you've got some work to do, calculating how much interest expense we would have. There are problems at the end of the chapter. Be working on those. I will upload some that I'll write. But
I have a quick question.
Sure.
I think the definition confused me a bit. The initial carrying value of the note would be the present value that you calculated.
Go look at what you just copied, the journal entry I did. What did I credit notes payable for?
The future value.
The face value.
Yeah, the face value, sorry.
Yeah, that's all right. Yeah, but so we credit note payable for the face value. So it's always going to stay the 640. What's going to be changing every year and becoming interest expense. Now this one was just a 1-year note. So that whole amount would be interest expense when you calculate it. Okay. But it's going to be you're going to be debiting interest expense and crediting the discount on notes payable every year that you calculate interest. So at the end of the life of the note, what is going to be the balance of your discount on notes payable?
Would it be 0 or would it be the?
Yeah, exactly. Okay. Because the difference between the present value and the future value, remember, is the implied interest that's in this non-interest bearing note. So if it was a 3-year note, the difference between your present value and your future value, which is the original amount of the discount, is going to become interest expense over the life of the note. So you're going to debit interest expense and credit discount on notes payable. So y'all need to review some problems on that. Look at the one that we did on Tuesday, and then, work some and get some practice on this concept. Okay, Edris, thank you. Okay, now let me look. I think I had another question, and this one is on what cost would be capitalized. What cost would be capitalized when we purchased land, but it had no building on it?
What was the question again?
Oh, y'all don't see it?
No, I see it on the poll, but I didn't hear what you said, what the question was asking.
Oh, I was just summarizing the question. Oh, I'm sorry, because it cuts off. Yeah, so it says property taxes paid were $3,000, of which $250 was for the period after the purchase. What is the amount that would be capitalized for the land? I ran out of room. I'm sorry, I see what you're talking about now. So what is the capitalized cost of the land? All right, so let's take, about 50 more seconds. See, I have a timer over here I can see. It's pretty cool. All right, so I'm gonna give about 10 more seconds. All right, I'm gonna go ahead and end the poll. And yay, the majority got it right, and it is the majority. So the 350,000, put these in your calculator. The 350,000 obviously would be capitalized because the intent was that we wanted just the land. Then the demolition of the old building would be capitalized. So plus the 12,000. Now, what would I do with the $1,500 that I got from selling the scrap? Would that be revenue, or does it reduce the cost of my land?
Reduces the cost.
Good, it reduces the cost. So subtract the 1,500. Now, what about the title insurance, the title transfer and the attorney fees? Expense or capitalized?
Capitalize.
Good, so add those, the 1,400, the 900 plus the 500. Now the property taxes. During the closing, they paid 3,000 for the property taxes, but only 250 of it was for the period after the purchase, meaning during the period that I owned the property. So did I have delinquent property taxes? Did we have delinquent property taxes that we paid?
Yes.
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 How much?
275. 2,750.
2,750. Do we capitalize or expense delinquent taxes? Remember, the delinquent taxes are the property taxes that were taxes owed by the prior owner.
Capitalize.
Good, we would capitalize it. So you would capitalize the 22,750. The 250 would be expensed. So 364,650 is the answer. Okay. We're going to spend next week on chapter 11. On chapter 11, you're going to see that there's a big conceptual difference between US GAAP and international and IFRS, in that in IFRS, that companies can revalue their long-term assets to fair value on their balance sheets. In the US, long-term assets are reported at book value, which is cost minus accumulated depreciation. Okay? But companies under IFRS can revalue to fair value. And there is, of course, it's in green, global, because that's where we see our IFRS concept problems. Read it and understand it. I will not ask you to do the calculations for the revaluation. It's one of the things that, because of online, that I'm going to not include. You must understand the concepts, and we will go over the concepts. If you have a connect problem that asks you to calculate the revaluations, just put a number, just answer a number. If you want to know, try it, but just answer because those connect problems I did at the beginning of the semester, and usually you do have to, I usually do teach the calculations of it. Then I will go back and give you those points back on Connect if you have one for calculating, in next week, okay? Calculating the revaluation. But conceptually,
Quick question.
we'll talk about it. Yes.
I'm sorry, because I've been cutting out. So you said to just put a random number if it asks to reevaluate. Is that what you said?
Yes, if on a Connect problem, if you have to calculate the revaluation, just put in any answer and I'll go back, and if you got it wrong, if you guessed right, then good for you. But if you got it wrong, I'll give those points back.
Okay, thank you.
Okay? You're welcome. Y'all have got some work to do because the exam's coming up. So be practicing problems at the end of 8, 9, and 10. Okay, except for the exchanges. We'll cover the exchanges that are in 10. We'll cover in chapter 11 for when we're doing the disposals, selling an asset, retiring an asset, and exchanging an asset. Okay? Do some work.
Thank
Don't
you
get
so much.
lazy. I
Have
know.
a great day.
Thank
Thank
you.
you.
Do the same. And email me if y'all got questions.
Okay.
Oh, tomorrow I am in the committee that I'm on has student research day tomorrow, and we're doing it on Zoom. And so tomorrow from noon until 6 o'clock, I am in a Zoom student research day meeting. So tomorrow I'm out, but look for stuff that I'm uploading into course content information over the weekend. Okay?
Can I ask a question about Connect?
Yes.
So I went to the problem that I wanted to see the explanation of, but I don't see any explanation.
Did you do it the way that through the instruction that I gave you? Don't do it through the link. Go into Tools and then into McGraw-Hill.
Mm-hmm.
Did you follow those instructions that I have on the announcement?
Yeah, I did. So Tools, McGraw-Hill, and then go to my Connect.
Go to your Connect section, and then you have to do something like See Report.
Yeah, then it's loading. And then I went to the one I wanted and See Report. It's in study mode too. So I know that I should be able to look at it. And then View Attempt.
Yes. View your last attempt.
Okay. And then
do you have it now on that? Did the explanations come up?
I mean, it tells me if the problem's right or wrong, but it doesn't give me any explanation.
Okay. I know Edris was working with McGraw-Hill on this. Melissa, I will send me an email and
Okay.
I will connect you and Edris up. I will get y'all connected up via email and maybe y'all can talk yourselves through that.
Okay, thank you.
Because he was able to do it and others were also. So let's figure out what you're doing wrong.
Okay.
So I'm gonna get Edris to help you on that.
Bye.
Okay. All right, Melissa, thank you. And don't forget to send me an email and then I'll forward it to Edris. Okay, thanks.
Okay, have a good one.
Do the same.
Yeah, so I had a question on that too. So what changed with that? Do you know why McGraw changed that?
They didn't change, for some reason when it's deployed through Blackboard, it doesn't show the explanations. It's some kind of programming error on McGraw-Hill's part.
Oh, okay.
Believe
So
me.
if I go on Connect's website, can I do it through that way?
Yeah.
If I connect, okay, I'll just go through connect.com then.
Yeah.
That's how I normally do it anyway for the homework.
Yep, you can do it that way. Brad, it's good seeing you. You showed your face. Yay.
Yeah. I was looking in Blackboard the other day, and I was gonna email you, and I just forgot to. So for the exam 2, how you said, you changed the grades or through Connect, and my Blackboard grade.
If yours didn't change, then that means that you didn't have any of those questions that had them added back.
Okay.
It's
All
all
right.
updated. Now, if you want to go through your exam and take a look at the ones you got wrong, just schedule a Zoom meeting with me and I can share my screen and we can go through your exam.
Okay.
Okay.
Yeah, no, I was just.
Sometimes it helps going through the exam with taking future exams because it helps you with maybe understanding the approach.
Yeah, no, I know. I understand what you're saying.
Okay, so if you want to look at it, just let me know and we'll schedule a Zoom meeting.
Okay, thank you.
You're welcome. Bye-bye.
Have a good day.
You do the same.